5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Wednesday. A done deal. Tokyo and Washington strike a trade agreement for a 15% levy on Japanese imports. Powering ahead after another record in U.S. stocks. Global risk rallies off the back of that trade deal. And all of that ahead of big tech earnings. That kicks off with Google and IBM. Tesla, that's on deck. So a record yesterday, just barely eking that out. And we get another leg to the rally this morning, again, supported by that deal with Japan. Does that mean more deals are to come with that August 1st deadline? The rally, though, I should say, is probably more pronounced internationally, especially things like Japanese automakers. Still, we are higher this morning by about 0.4% for the S&P Russell 2000 futures. You can see the small caps really outperforming off the back of the deal, up 1%. So a lot of news out of Japan. Of course, the biggest is the trade deal, but there was also a bond auction in Japan, a 40-year bond auction that went really poorly. And off the back of that, you can see bond yields are pushing higher across the globe, but here in the U.S. too, being led by the long end of the curve. 30-year yields, those are up 3.3 basis points. Your 10-year yield stands at 4.37. You can see just how poorly Japan is doing at the bottom of your screen. That is the highest yield since 2008 for the Japanese 10-year. Let's get you some stocks moving this morning. With that is Bloomberg's Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start out east with Toyota, jumping 14% in Tokyo trade. Its best session since October 2008. So that puts it in a bit of perspective for you, just how much we had not priced in the fact that these car tariffs could be knocked down to 25% to now down to 15%. It's also giving a boost to European auto names, and we'll be checking those U.S. auto names as well. Let's move on to meme stock mania, Danny, because it has spread. This time, it's Krispy Kreme. A lot of internet chat about this stock, about how the short interest as a percent of free float is around 30%. This stock jumped 37% yesterday on no new company news and is rising again in the pre-market, up around 18%. So watch out for meme stock mania taking another loser there. Pre-market, Texas Instruments, we got to talk about this one, down 12%, Danny. They gave quite a guarded forecast for the year ahead, and the market really did not like that the CFO couldn't quantify what number, what percentage of their sales surge in the second quarter was due to those customers front-running tariffs. Danny.
Valerie, thank you so much for that. Bloomberg's Valerie Teitel. In just moments, we're going to be speaking with Seema Shah of Principal Asset Management, who will join us on this equity rally. Later this hour, we'll push ahead to tech earnings with Alan Bond of Jensen Investment Management. Back to our top story this morning, the U.S. and Japan strike a trade deal.
Signed the largest trade deal in history, I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
Joining us now is Bloomberg's Brendan Murray, who leads our global trade coverage. Brendan, what does this deal look like?
Well, we know that the headline figures in the deal, the 15% tariff on Japanese imports, as well as the 15% tariff on cars, are a bit of a relief to officials in Tokyo. They had expected some of those figures were going to be as high as 25%. So 15 sounds a lot better. And I think the main takeaway is that these deals, as they start to trickle in, are coming in at the low end of the range of the tariff levels that President Trump has threatened. Sometimes 25, sometimes 35 or 45%. So the handful that we've seen come in so far have come in well below those threatened rates. So we can look forward to the negotiations with India, with Taiwan, with the European Union and Switzerland and some other countries. And I think the market is taking some comfort in the fact that those tariffs are coming in lower than expected.
Yeah, so maybe the market was right to look through any of the tariff scare in August 1st as this concern. We did hear from Treasury Secretary Scott Bessent. He spoke on Fox about an extension to the U.S.'s tariff truce with China. Brendan, let's take a listen.
China, that deal expires on August 12th, and I'm going to be in Stockholm on Monday and Tuesday with my Chinese counterparts, and we'll be working out and what is likely an extension then.
And Brendan, China's Ministry of Commerce just affirming that this morning, saying that China and the U.S. will hold trade talks from July 27th to the 30th. Does this mean that China gets another extension, or are we likely to see some sort of deal get inked?
It sounds like they are going to get another extension. Of course, Secretary Besant also said that he wants to broaden those talks to include things like sanctioned oil that China is buying from Iran and Russia. And so it will be interesting to see. We don't know what's on the agenda yet. We don't know yet what the content of the negotiations are, what the goals are going to be, what the deliverables are to be expected. But it sounds to me like the U.S. wants to broaden those talks out beyond just the tariff levels and the rare earths and the export controls that they've been discussing for the past couple of months.
Brendan, thank you so much more for that. We have a lot more to discuss on that front. I'm sure we will catch up with you later. By the way, tune into Bloomberg Surveillance. They're going to be speaking to U.S. Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and later Senator Bill Hagerty. Conversations you do not want to miss this morning. Now, global stocks are rallying on that trade optimism. Principal Seema Shah weighs in, writing, quote, even in an optimistic upside scenario, the average effective tariff rate is still expected to triple compared to its level at the start of the year. Yet beyond the short term, investors should expect continued gains in the S&P 500. Seema Shah, Chief Global Strategist at Principal Asset Management, joins us now. Seema, how do you weigh up these two things? The fact that when we get these deals coming in, it just powers ahead a rally, also powered by earnings, but still this risk remaining and tariffs, which are ultimately settling higher than they have been in some time.
Hi, Danny. Yeah, I mean, look, I think as we're going through the coming weeks, there's going to be a lot of to and fro. I think August the 1st, whatever comes out from there, isn't necessarily the end of the tariff discussion. We can see that, the way that the US is likely to negotiate with China, that tariffs are going to be used as a negotiating tactic going forward. So I think it's important investors try and look through. What we have seen in the last couple of months, of course, which is reassuring markets, is that the economy is continuing to power ahead. So the key thing going forward is, how are earnings performing? How are companies, what is their forward guidance with regards to how they're navigating all of this noise? But generally speaking, it's still a fairly constructive environment, which should mean continued gains for risk assets.
Some of these earnings, Seema, have been really fascinating. Just look at GM yesterday, or even RTX, two companies that on a headline level beat their earnings, but noted some really big hit to tariffs. Seema, it seems that there are a lot of companies right now that they are the ones paying the cost of tariffs. Is it your assumption, especially with these more cyclical type companies, that we are going to be undergoing a period of margin compression?
I think it's likely. I mean, I think the thing that's very unclear for investors is exactly how much of those tariffs companies are going to eat and how much is going to be passed on to consumers. I think that's what we're trying to is going to be really important about this earnings season, is understanding what a company's doing. But certainly we would expect there to be a little bit of margin compression. Otherwise, certainly I think companies would be doing extraordinarily well. It's still constructive and they are finding ways around it. But we are anticipating at least some pressures, which to us is, I guess, the key implication of that is, we're expecting positive gains, but probably not as strong as we've seen in the last couple of years. So it's constructive, but we're not talking about double-digit returns, for example, for the S&P 500 over the next 12 months.
Well, George Serravelos at Deutsche Bank was looking at the data that we have so far, basically asking the question, who is paying tariffs? And the resounding answer is not exporters, that they haven't slashed costs as some would hope that they would to mitigate any of the problems going forward, that it is the GMs of the world. But Seema, if it's only a little bit of margin compression that you're noting, does that mean that it is getting passed on to a consumer? And then does that translate into more consumer weakness and thus economic concern?
Yeah, as I said, that's the thing that we really want to understand. The news that's trickling out from a couple of companies is certainly that they are passing on at least a percentage of those price increases to consumers. And exactly to your point, one of the things that we've been seeing is that consumers have stayed resilient, but that's partly because real income growth continues to be positive. And real income growth is going to be very much driven by what is going on with those price increases, and of course also what's going on with labour markets. So those are the two factors which of course everyone is watching, is what the Fed is watching, but that's going to be the one that really dictates how strong does the US economy remain, or are we going to be looking at further weakness down the line, which of course would then have some considerations for earnings.
Well, the other factor in here is the one big beautiful bill, Seema, and the benefits get really front-loaded in 2026. Is the growth we might see from that stimulus enough to supplant some of the weakening growth we might get from tariffs?
I think it does some job of offsetting. So if you look at just what's going on from the tax cut side, that is positive for economic growth. But we do think a lot of that is going to be offset by the tariff increases and certainly some of the spending cuts. So overall, when we're looking at this, I'm not sure that there is entirely enough of an offset provided by tax cuts. But as you know, to the point, it's I think what we're really understanding in the last couple of months is just, I think the robustness of the US economy has been surprising to everyone. At the beginning of this year, there was this expectation that there would be something of a slowdown, that there was some weak points within the US economy. And actually, if anything, the continued strength has been really surprising. And that's why I think you're seeing these upgrades to some of the growth forecasts and expectations that we're hearing from around the market, that actually equities can continue to perform pretty well as the year goes on, even as you continue to have this tariff noise. And even as actually, I think some of the tariff news is a little bit worse than what a lot of people were expecting.
It keeps happening over and over again, Seema. It feels like we keep underestimating the resilience and the strength of the U.S. economy. At the same time, though, you are seeing a bond market that has been having some reactions. It is duration that keeps getting hit. Seema, maybe this time around, it's coming from Japan with a really weak auction there for a 40-year yield. This global concern of fiscal sustainability, how much of it is that is a global story versus coming back around and making it difficult to really buy duration for the U.S. because of the deficit spending that we're about to undergo?
Yes, from a fixed income perspective, the thing that we've been really trying to focus on is that short duration, simply because all of the fiscal concerns around the globe, there are all a lot of idiosyncratic issues, but they all kind of combined by association around the fiscal concerns. And that means to us that some of the long duration area is a bit that I guess we're more willing to avoid. Certainly from a long end of the US Treasury curve, we are expecting continued upward pressure because of those fiscal concerns. And I don't think that's going to be resolved anytime soon. So we do think this is going to be an issue which percolates over the coming years. And you could see that steepness as the yield curve just continuing.
Seema, before we let you go, just because we are about to get some of the Mag 7 reporting today, we'll get both Tesla and Alphabet. For you, are these bigger market drivers in this current environment versus some of the deals that we're going to get trickling in from the White House? What is the bigger factor you think that's going to dictate where we go from here?
Yeah, it's a great question, because I think what we're seeing is that the market is looking through some of the tariff news. We know that there's going to be a lot of to and fro. So they're trying to look forward to the next year and a half and focusing on the resilience of the US economy. So the other side of that, to your point, is about the Mag 7. And those Mag 7 continue to be the key driver of US equities. And as long as they continue to deliver, as long as AI continues to be a key theme for investors, that is going to be one of the key supports for US equities. So actually, I do think that really focusing on earnings from a broad side, but also focusing specifically on those Mag 7 is going to be absolutely key to forecasting how the US equity market is going to perform.
And we'll get, again, Alphabet, Tesla after the bell today. Seema, wonderful to get your thoughts this morning. Thank you so much for joining. That is Seema Shah. Let's get you some other top stories now that are trending on the terminal this morning. The UK Supreme Court has just reversed the convictions of Tom Hayes and Carlo Palombo, the traders who were found guilty in the LIBOR scandal. The court allowed both appeals, stating that the juries had been misdirected at both criminal trials. Hayes was sent to jail a decade ago, while Palombo was jailed in 2019. Japan's Prime Minister Ishiba says that there's no truth in media reports that he will resign. It comes after a historical election setback on Sunday, with Ishiba and his ruling coalition losing their majority in the upper house of the Japanese parliament. And Morgan Stanley is being probed by the Financial Industry Regulatory Authority over its vetting of clients for the risk of money laundering. The Journal reporting that the scrutiny focuses on the U.S. bank's clients, risk ranking, and other practices from October 2021 through September 24. Coming up, we'll turn to those earnings. Tesla set to report after the market close. We'll have your details next on your brief. This is Bloomberg Brief. I'm Danny Berger in New York. We have some big names on deck for earnings today. One of them, Tesla, set to report after the market closed. Let's get more from Bloomberg's Danny Lee. Danny, what are we expecting?
Well, Tesla is entering a period of historical weakness, driven by the fall in sales quarter on quarter. So, we've seen the most recent quarterly period of which will report sales are down 14%. And so that may very well be baked into earnings. We are expecting revenue for the second quarter of around $23 billion US dollars, earnings per share of around 44 cents. But this comes off the back of what the first quarter, when it's a fascinating transition. In fact, when we heard the likes of US President Donald Trump encouraging people to buy Tesla EVs, then into this second quarter where we saw this dramatic split between Elon Musk, who runs Tesla, and him exiting the US administration, leaving his Doge position. So it's now for Elon Musk. He has the time to really reassess what is going on at Tesla, and he has pledged to turn things around given its historic weakness and the fall in sales across the board, and from the likes of Europe, in the places like in Asia and China, and even in parts of North America. So yeah, this is a very key time that investors will be looking to hear more from Elon Musk about what he will do to try and turn around Tesla.
Well, at the same time, Danny, there was a tweet from Elon Musk earlier in this week basically saying, I'm back to 7 days in the office and sleeping in the office when my kids aren't around. But then we also got this document from SpaceX overnight saying that there is a risk that Musk does more in terms of politics and as previously serving as a senior advisor to Donald Trump. What is it our understanding at this moment what Musk's split is and how dedicated he is to looking at Tesla? Because this has been something that analysts over and over again in the first quarter, to your point, were concerned about.
Well, I think it may well be very well like just a heads up to investors, given the extent of which Elon Musk's presence across the board, his business activities do intersect with politics. We've had previous reports about how Elon Musk is looking to invest or back individual candidates in politics to have at least a raft of allies he can rely on in future. But then again, you just look at how Tesla is set up for the future. It still is going to be a challenge for them, going forward. And I think when you look at just this earnings period, I think it's going to be critical that investors want to hear more about this turnaround, more about some of the business activities, such as the robo-taxi, which has been testing in Austin, more about this AI and autonomous future. So there's a lot that Elon Musk has pledged, despite being distracted by the politics. And I think it's going to be incumbent on Musk to put all that action and words in, put all those words into actions to ensure that he can put Tesla back on a better footing. And I think it's going to be critical with this second quarter. There looks like there should be a full-year guidance that may well disappoint or excite investors.
The politics, though, in some ways is impossible to avoid, Danny, especially when you have things like the One Big Beautiful Bill ending early some of the tax credits when it comes to technology like EVs. We heard from GM yesterday that doubled in terms of its sales of EVs. Danny, where does demand stand right now? Is there robust demand, or are we seeing this kind of pull forward effect to try to get ahead of what is likely legislation that might dampen some of the demand?
Well, there is that ticking clock on the EV subsidies in the US, I think towards the end of September. So there may very well be a pull forward effect into the third quarter. But then you look at what Tesla is going through, its lineup, it still needs an affordable EV to perhaps, analysts say, revive its flagging sales. And it does have a very thin lineup as well. So we may see a bit more of a benefit. But then again, just the way in which the federal backing of EVs is not so much there, whether it be for the EVs or for charging. I think we may see a bit more of a cooling down in the kind of months to come.
Danny, thank you so much for that. We really appreciate your time. That is Bloomberg's Danny Lee. Coming up, Microsoft warns as hackers hit a U.S. nuclear agency. More on that and what else is making headlines in your front page news. That's coming up next on Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning. First up on the Wall Street Journal, they lead with President Trump going to bat for big tech in global trade talks. The Journal reporting that the administration is hoping to use its threat of tariff and its offers of access to the U.S. consumer to stop countries from imposing new taxes, regulation, and tariffs on Silicon Valley. Next, the Financial Times reporting that McKinsey has stopped its China business from undertaking consultancy work related to generative AI, all that due to geopolitical tensions. The U.S. firm is refraining from such projects due to Washington's growing scrutiny of Western company operations in sensitive sectors. And one of the most read on the Bloomberg this morning, Microsoft accusing two Chinese state-sponsored groups of exploiting its SharePoint software to target users like large corporations and government agencies. Bloomberg exclusively reporting that the U.S. National Nuclear Security Administration was among the targets, as was the Department for Education. A quick look at your bond market this morning, and it is sensitivity of fiscal concerns and whether we will keep buying duration bonds. Japan having a poor 40-year auction this morning, and now you're seeing 10-year yields in Japan up by 7 basis points. That is the highest level since 2008. Other bond prices falling in sympathy from the U.S. to the UK. Okay, coming up, we're going to speak with Alan Bond of Jensen Investment Management on the remaining market risk despite renewed trade optimism. That's coming up next on Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this morning. A done deal. Tokyo and Washington strike a trade agreement for a 15% levy on Japanese imports. Powering ahead, another record for U.S. stocks. The global risk rallies off the back of that trade deal. And all of that ahead of big tech earnings. Those kick off with Alphabet and IBM. Tesla, that's on deck. Some big headlines out of Japan this morning, a trade deal, of course, being the biggest. The hope that some other countries might avoid higher tariffs come August 1st. So you can see we're higher by about 0.3% for the S&P 500. NASDAQ a little bit worse. Russell even better at highs of the future session this morning, up 1.1%. For this bond market, though, perhaps a different Japanese story. A very weak bond auction for a 40-year. You can see at the bottom of your screen there, 10-year yields in Japan at their highest since 2008. So we break 5 consecutive days of declining yields to move higher this morning. Your 10-year yield up by 3 basis points at 4.37. Let's look at some of the stocks moving in the pre-market, and one in Japan with that is Valerie Teitel. Hey, Val.
Hey, Danny, good morning. Yes, let's start out east because this was a big one. Toyota surged over 14% in trade out in Tokyo. Its biggest move since October 2008 goes to show just how much we had not priced in some reprieve when it came to those sectoral auto tariffs. It's actually leading shares in Europe to rise as well. Mercedes having one of its biggest jumps in a few years. I want to move on to meme stocks, Danny, because I'm afraid there is another one. GoPro jumping some near 50% in pre-market trade. It is the most traded stock by volume so far in the pre-market. This one is going viral on the internet. Now, I did look at the short interest on this stock. It is just around 10%. So what the frenzy is about this stock, I think I'll have to scour the internet a bit more to find out. But the second heaviest volume traded stock on the pre-market is Krispy Kreme. This is another meme stock to keep an eye on, up 17% in the pre-market. And this comes after it rose 37% yesterday on no new corporate news. Another one to add to your radar, Danny, I'm afraid there's a fair few of them this morning, is 1-800-Flowers, up 8% on decent volumes as well. Danny.
And who says that the consumer is still in trouble if we still have enough money, apparently, to throw at meme stocks? Valerie, thank you very much for that. A lot of stocks to keep an eye on. Meanwhile, our top story this morning, another trade deal in the books for President Trump.
The largest trade deal in history, I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
Joining us now is Bloomberg's Brendan Murray, who leads our trade coverage. Brendan, it's kind of incredible to believe, since feels like it's been going on forever, but we're still here in the early innings of getting trade agreements done. What did we hear from Japan?
Well, this deal all along was always about cars and the tariff level that the Trump administration was going to put on Japanese exports to the U.S. and coming away with a tariff level of not only the reciprocal level of 15%, but a 15% rate on cars is a relief to the Japanese automakers and will annoy them, but it won't crush them in terms of how their sales will go in the U.S. There were also no limits put on or quotas put on the amount of Japanese exports to the U.S. So that was also looked at as a relief as well. well. There's still a lot of details we don't know. We don't know much about the timing of the $550 billion investment fund that Japan is apparently setting up to spend in the U.S. on investments. But some of these details we'll have to see how they come out. Japan also conceded some on the barriers that they have to U.S. exports. So the headline numbers seem to be a relief that these tariff levels that Trump has threatened, they're coming in much lower than what they have than what they were announced back in April. So I think there's a bit of a relief that other countries could get similar kinds of deals that will hurt their economies but won't crater them.
We still, though, are waiting, Brendan, for two of the bigger deals, and that is with the EU and China. And on China, Treasury Secretary Scott Bessent was speaking with Fox Business about an extension to the tariff truce with China. Take a listen.
China, that deal expires on August 12th, and I'm going to be in Stockholm on Monday and Tuesday with my Chinese counterparts, and we'll be working out and what is likely an extension then.
And the Chinese Ministry of Commerce affirming that meeting is indeed happening, Brendan, this morning. What might we expect out of these talks? Is there any likelihood that it's a deal, or is it more can kicking?
Well, it seems pretty clear that they're going to extend those the truce that they have from the sky-high tariffs that they've had for the past couple of months. We don't know if it's going to be a 3-month extension or a 6-month extension, but both sides are coming to the table to try to free up some of these export controls that they've put on each other. And Bessent also said that he wants to talk about Chinese purchases of oil from Iran and Russia. So the talks could broaden to these wider sort of geopolitical questions that the Trump administration wants to address with China.
Brendan, a lot of questions to be addressed. Thank you for joining us. That is Bloomberg's Brendan Murray. And tune into Surveillance. It is an all-star lineup. They'll be speaking to U.S. Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and later in the program, Senator Bill Hagerty. Now, that trade deal with Japan is fueling more gains in equities this morning, already closing at a record high. Alan Bond of Jensen Investment Management sees a continuation of risk on sentiment from the renewed optimism, and I'm pleased to say he joins us now. Alan, so does this deal with Japan just affirm the market's desire to look through the risk of August 1st?
Yeah, well, that's definitely what we've seen. The market's been willing to look through the tariff risk really post kind of Liberation Day in early April. It's fueled on, like you mentioned, a risk on sentiment. We saw that a lot in the second quarter. And this is going alongside expectations, right? We expect these deals to get announced kind of incrementally. And yeah, so far, like we just mentioned on the last segment, nothing really scary yet. And it's allowed investors to latch onto other themes. And the theme that's really driving the market still is the business performance and the earnings from the big tech companies, and the theme of AI and investment. And that theme still seems to be very alive. And we think that's what's driving the stock market.
Well, it is AI, again, that's making up some 33% of the index right now. And these are companies that are probably less exposed to tariff risk. Yes, NVIDIA takes a hit, but not as much as a GM. Does that mean underneath the surface, there are maybe more concerning trends of companies seeing margin compression that wouldn't necessarily show up on a headline level because of what we're seeing from AI?
Yeah, I think there's that. And the other big uncertainty right now is just the timing of all this. You know, we know that tariff revenue is real. It's coming into the government. Tariff revenue was up a lot in terms of U.S. Treasury collections. But we haven't really seen it in the numbers yet. And we're starting to see it, like you mentioned, in some of the automakers' earnings. They're saying, hey, look, our margins are getting hit. We think this is a key question that we're hoping to see answers to as we get through earnings season. And you're right, the big tech stocks aren't as directly exposed, and they have, you know, they're financially strong, financial flexibility, and we think they can continue to be the driver of this trend that we're seeing.
I've seen a lot of people saying, look, this is still a really hated rally. It's the least loved, and that means it can continue on. But at the same time, you have meme stocks apparently coming back again and people acting in really speculative ways like they did in 2021. How do you gauge market sentiment right now? And whether this is a market that feels stretched at record highs, or whether there's still more participation to come?
Yeah, meme stocks are back. I've seen the same thing. There's no doubt about that. Who knows if that's a sign of the top? And the hard part with these kind of trends, like I said, it's been risk on for the past 4 months. That could keep going for a while, right? It's really hard to predict that in the moment. Our focus as kind of long-term stock pickers is finding businesses that we think can kind of weather the storm through thick and thin, that can participate in this upside. We added to some stocks in early April when the market sold off to try to help our portfolio in that regard. But more importantly, we're looking for businesses that, if things do cool off, have the business fundamentals that can kind of carry themselves through. And that's been our focus as we've been kind of managing and navigating the markets.
So what are some of your top picks there then?
Yeah, well, it's interesting. One of the ones that we just put in the portfolio is Meta. It's a newer stock for us. We think Meta, so we all know the business, right? But maybe just as a quick rehash, billions of users, ubiquitous platforms in terms of Facebook, Instagram, WhatsApp, and it creates this really, really valuable user data that they can monetize. That's in the business model. But what we think is interesting about Meta right now is we see them as a near-term beneficiary from AI. They can use AI to make their business better. They can use it to increase user engagement. They can use it to improve user experience. They can use it to improve the monetization of their ads, right? And so we look at Meta, and they're making big investments. We know they're writing some big checks right now, but they have the checkbook to do it, and we do think there's near-term returns on those investments.
This grab for talent that Meta is doing, does it not just have the impact of benefiting Meta, but slowing everybody else down too? If they're wiping out teams at Apple, if they're hiring away from OpenAI, does this become a competitive advantage that the top talent is now at Meta and not elsewhere?
Yeah, and I think that's a really good point. The AI talent is a scarce resource, and that's obviously, you can see that in the big price tags these people are garnering. And Meta's being aggressive, and oftentimes we're still in the early days of AI, and I think that's the important thing is everyone's trying to figure out, okay, what exactly does this look like? Meta looked like they were ahead with their open source model. Now it looks like maybe they're thinking, hey, maybe we need to revisit this. But the thing with Meta and really like a lot of the other tech giants, these are financial powerhouses. They have the financial flexibility to do this, and they can take big swings. And oftentimes in early stages, aggression is rewarded. And we see Meta being an aggressor right now.
The expectations for earnings for a lot of these Mag 7, though, is slower growth, certainly not slowing, but slower growth, maybe save for NVIDIA. Will investors still reward slower growth, or do they need to come out continually in the quarters with really miraculous and stunning projections of growth? Or can you still reward just a more steady earnings environment?
Yeah, well, what we've seen so far in earnings season, a little bit of a trend where results look good, but outlooks are under question, and stocks have reacted negatively to that in certain situations. Obviously, we haven't seen the big tech earnings yet, so that remains to be seen for that group. What we're really focused on is their outlook for CapEx and their outlook for investment spending. We think that has been the big driver of the tech boom that we're seeing, right? So the big hyperscalers, they invest in data centers. That's kind of a proxy for this AI investment theme. And we got good news in the first quarter, right? They reaffirmed their guidance. Those comments in the second quarter, we think are going to be, we're going to pay very close attention to as investors.
So if you have more capital expenditures coming, you also have one big, beautiful bill that you're going to see stimulus coming in 2026. You're maybe going to get rate cuts as well. Does this thing just continue to power into the next year, too? Because there's a lot in 2026, not to mention deregulation of banks and easing environments there. Are we just going to continue to see this boom heading into 2026, or are there real risks that something could derail it?
Yeah, I think there's a couple of key questions that we're looking for answers to right now. One is we already talked about with tariffs. What ultimately is the impact of those tariffs going to be on prices for consumers, on margins for corporations, right? That's a question. We're starting to see the answers to that, but we don't have the full answer yet. The other implication is the Fed, and you mentioned it. The Fed has been on the sidelines for 2025. At one point, we thought June was going to be a live meeting, right? And they're going to cut rates, and then no, that's not going to happen. Maybe now in September. And it appears what they're looking at is the same uncertainty we're looking at, which is that, okay, we know tariffs are happening. They might be inflationary. We don't see it in the numbers yet, but they're kind of in this wait and see mode. So the answer to that question about what happens with Fed policy, we think is critical for kind of continuing this this rally and this optimism.
Hey, and critical in response to what the White House might say to that, too, if they aren't able to cut rates later this year. Alan, I won't drag you into that debate. Thank you so much for joining this morning. This is wonderful. We have to do this again. Alan Bond of Jensen Investment Management. All right, now let's get you some other top stories that are trending on the terminal this morning. The UK Supreme Court has just reversed the convictions of Tom Hayes and Carlo Palombo, the traders who were found guilty in the LIBOR scandal. The court allowed both appeals, stating that the juries had been misdirected at both criminal trials. Hayes was sent to jail a decade ago. Palombo was jailed in 2019. Japan's Prime Minister Ishida says that there's no truth in media reports that he will resign. It comes after a historic election setback on Sunday, with Ishida and his ruling coalition losing their majority in the upper house of the Japanese parliament. And a Bloomberg exclusive, the U.S. National Nuclear Security Administration, the U.S. Education Department, and the Rhode Island General Assembly are among agencies that have been breached by Chinese state-sponsored hackers. Microsoft has warned that they exploited flaws in its SharePoint software to break into institutions globally. Coming up, Texas Instruments plunges on pessimism, Alphabet and IBM, the next set of tech earnings that will report. We're going to break down what to expect. That's coming up next on your Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. Tech earnings season in full swing. Both Google and IBM will be reporting after the market close to kick things off in earnest for Mag 7 and the rest of the sector. Let's bring in Bloomberg Tech Europe host Tom McKenzie. Tom, let's start with Alphabet. What are we expecting from the tech giant?
We're expecting a solid set of results. Look, year to date, the stock is essentially flat for Alphabet, the parent company, of course, of Google. But the digital ads part of the business, there is an expectation that's going to come through quite strongly for them. The focus, of course, will be on the cloud as well. That is seen as the biggest driver of revenues of future growth for Alphabet. And whether or not executives come out and outline a strategy to defend the search part of the business, you see that increased competition from some of the AI players like Perplexity AI and ChatGPT as well, pushing into search. What are they going to say about how defensible that part of the business is? But yes, we're expecting digital ad sales to pick up. Any updates as well around their AI model, Gemini AI, will be important as well. That will be scrutinized by investors.
Tom, we're also in this environment where tech might be safe from tariffs, but not all tech is created equal. And some of the chip makers have been really interesting in here. We heard from NXP yesterday, Texas Instruments also yesterday, two chip making companies that are really exposed to the auto industry. Just how much are tariffs hurting these companies?
And it was exactly that part of the sector. It was the auto industry that Morgan Stanley zeroed in on in terms of their note on the back of these earnings from Texas Instruments, saying, look, the expectations, yes, they were high for Texas Instruments. And despite the fact that they beat in the most recent quarter, and their forecast for the third quarter was actually slightly better than most estimates, Morgan Stanley says, yes, expectations high, but it's key and clear that auto industry demand still has not turned around, and they're not forecasting yet a turnaround, Texas Instruments. And so that was a note of caution from Morgan Stanley, just one analyst looking, of course, at this. They have 100,000 clients. They are starting to see, in terms of what the growth is, a little bit more detail. But what they didn't get, in terms of the analysts, was details on and to what extent there was a pull forward in orders in the second quarter. They were looking for that clarity from the executive team at Texas Instruments on the call, and they didn't get it, and that led to concern. A little bit more caution in terms of the commentary from Texas Instruments as well was part of the factor why you're seeing a big drop pre-market in terms of their shares. We look ahead, of course, to IBM as well, Danny. Slow and steady progress is what analysts are seeing when it comes to this business. The shares are up. You've seen the gains, of course, year to date for IBM. The services, the data center, they're expecting growth of about 5% in terms of revenues, above $16 billion for the most recent quarter. And again, the analysts see a business that is returning decent profit in a steady rate as they push into some of those AI products. They're benefiting from that lean into AI, IBM, and some of their bets on quantum as well. So that is seen as a steady driver of growth for IBM, one to watch later today.
From the hardware to the software, Tom, thank you so much for that. Tom McKenzie, again, earnings to look out for both Alphabet and IBM, not to mention Tesla will also be reporting after the market close. Let's now turn to financials, because the Wall Street Journal is reporting that Morgan Stanley is being probed by the Financial Industry Regulatory Authority over the vetting practices of its clients. The firm is already facing potential fines from federal investigations into anti-money laundering practices. Joining us now is Bloomberg's Nicholas Comfort. Nicholas, what do we understand about what is being alleged here and the impact of it?
Well, first of all, we should start by saying that Morgan Stanley is pointing out that they have been investing in their controls for several years. So just for fairness' sake, they also say that there are regulatory probes and dialogues are commonplace. But what the journal is reporting is that specifically in the vetting of wealth management clients and the due diligence that's done on these people, on wealthy clients who bring a lot of fees to banks, that Morgan Stanley has not been doing a good enough job. Now, important to note that FINRA is the industry's own regulator. This is not a government agency, and the fines, if there were any, generally tend to be a lot lower than those from government agencies. So it's probably a much lower figure than one we were looking at there. I think what's really interesting here, though, is that for all the talk of deregulation and a change of window of the Trump administration, there are clearly people behind the scenes who are still looking very closely at what's going on at banks and the standards that are being upheld, whether there was wrongdoing or not. There are people who are still on the watch.
It's a really interesting point, but also to the fact that fines might be lower, might be why Morgan Stanley shares aren't reacting at all to this. But what could be the response from Morgan Stanley? You mentioned some of the comments they already had. Is this a Morgan Stanley that will need to be spending more money into the future to beef some of these protocols up?
Well, like I say, they point out that they've been spending for several years now on this as well, and there has been sort of a big push at banks to really know their clients and know their customers. Clearly, wealth management, it's a very lucrative business because these are wealthy clients. You can sell them more complex products which command higher fees. It's great also in terms of being less dependent on interest rates. But you have to know, where did these clients make their money, and where does this come from? You've got to be looking out on news flow around them, but to be aware of where this comes from, and it's going to be a continual investment for Morgan Stanley and other banks as well.
Nicholas, thank you very much for that. That is Bloomberg's Nicholas Comfort. Coming up, we're going to get you set up for your trading day. President Trump is scheduled to speak at an AI summit. Your trading diary coming up next on Bloomberg. Let's get you set up for your trading day today. First, existing home sales data that comes out at 10 a.m. Eastern. Then all eyes on some of the Mag 7 stocks reporting after the close. We'll get both Tesla and Alphabet. They will be the first to go this quarter. And finally, President Trump will be delivering remarks at the Winning the AI Race Summit in D.C. All right, some of the individual movers this morning. Texas Instruments, that is plunging, give a very shaky third quarter revenue forecast, falling short of expectations because of the chip makers' exposure to the auto sector and tariffs there. Krispy Kreme, it's all about the meme stocks. I guess something on the internet was said about Krispy Kreme, and there you go, almost a 20% rally this morning. Finally, ending things off with Constellation Energy. We're seeing power producers gaining. There was an auction for the largest U.S. grid that set a new record. Capacity price per megawatt, if you're paying attention or care about these things, was $329.17. So Constellation Energy, those shares up just over 4.5%. All right, a quick check on this bond market because it was a weak auction in Japan. That's leading duration lower. In Japan, the highest yields since 2008. All right, that's Bloomberg's Brief. Surveillance up ahead with a conversation with the U.S. Treasury Secretary. This is Bloomberg.